talk about conventional and general FHA?
I don't know where I stand. These guys have covered all of it.
Look, no, look, there's more money out there.
I I don't know. I mean, right now, what I'm finding it a little different is that as an FHA, I'm able to still do it with a credit score of 580, and the rates are not that bad. Able to, because I know the investors are not doing it up to going for a 620 or 640. They are not taking any of those. I don't know if that makes a difference right now in the market or not, because everybody else was able to do that. I guess I'm trying to figure out where the niche is. Of course, I do conventional loan with a higher credit score and all of those things. The rates are excellent. Those things.
We'll talk about like the down payment requirements. A lot of times people assume you need what, 20% down if you're going to do a loan.
Yeah, Gary, do you do Home Ready and Home Possible? Because I do a lot of those as well. Yeah,
yes,
Home Ready is a fantastic.
Home Ready is awesome.
Yeah. Yep. The Home Ready, Home Possible it's not for a first-time home buyers as well. It depending on the income driven, and they get a good 3% down with the income, and
Do you do VA loans?
VA, I don't do a whole lot. I can do it, but I'm not. My market is not for. My market is mostly like conventional loans and FHA and kind of a.
So the conventional, what is it? The 3%, 5%, 20%? Because when people hear of conventional, they are thinking 20. But I know you have like 3 or 5% programs. Can you?
Right. So you do it minimum you can do with 3%. Like Gary was talking about, even the 1% is a conventional loan. So what is happening is FHA is getting more strict, where conventional was making it more easier for the borrowers to go that route. The advantage, now we are finding it as a conventional, you're putting 3% down. Your PMI will eventually go away. FHA loans, PMI will never go away. They would charge you a front mortgage. So if you have 680 or so and you can put 3% down, you can go into a Home Ready, you are better off going as a conventional rather than the FHA. So my criteria usually is, first I try to figure out, is there a way I can do it as a conventional? I mean, like, you can even do as low as 620 if DU approves it. In a longer run, conventional could be better because of that upfront mortgage insurance and the PMI factor. Even for a lower credit, it may be a problem that the rates are higher than the FHA loans, but then you can get rid of the PMI. So
you got your
that's
LPMIs.
A very big advantage.
Your LPMIs where you can,
Yep.
The PMI is a private mortgage insurance thing that benefits you lenders, right?
No.
No, it kind of makes us all mad, truth be told.
Yeah. So hey, Mr. Gupta, tell us about LPMI, because that's huge, especially out in Loudoun County when certain clients don't have 20% to put down but refuse to pay mortgage insurance.
Okay. Well, nowadays I most of the time I tell them to pay the mortgage insurance. Because LPMI is basically you are paying a higher rate of interest on the whole loan amount. Whereas when you pay the PMI, right now the PMI rates are so excellent. The credit score is good. They are very cheap. So rather than go with the PMI and then gradually as your principal is going more, PMI will go away and then eventually go away. Sure. Yes, but you have an option of paying a lender paid PMI. When I bump up the rates, they will pay it. Or you can pay at one time the whole, PMI, so it doesn't. Sort of touch wood. I have been able to convince people not to go with the lender. What I don't like, I don't sell it, because
in the right circumstances, the situation, if you know you're only going to be in the house for usually the payback period. If it's more than 6 years, typically you don't want to do it. But it's just options that don't exist or only exist with conventional that don't exist with other programs.
FHA, you have to, even if in a FHA you are putting 20%